Hi everybody, Griffin Cooper here from Ablewaytech, and this is going to be a little mini lesson and application of the Gapstat by Dr. Ken Long. The Gapstat is a way that we can really understand the nature of particularly equities markets and their gaps. And through our research, what we've seen is that we can't predict the direction based on the gap, right? If it gaps up or down, there's really no uh, evidence that shows we're going to know which direction. But what we do know though is that large gaps often lead to larger follow through. This can be good for a lot of non-biased directional styles of trading, like the frog system, opening range breakouts, even Kata challenge patterns, things like that. And so the gap stat itself, the measurement, well, the idea of what it's trying to do is it measures the size of price gaps up or down relative to its average gap over the past 200 days to develop a statistic of it. And so we can kind of divide those into three categories. We could say that there's large gaps when the gap is greater than the average gap plus one standard deviation. There's small gaps, right? When there's less than one standard deviation minus the average gap, and then there's kind of the normal behavior in between those large and small. So what's the market implications of this? Well, the large gaps may indicate uh, significant price movement. So we can think that the large gaps equal some kind of unusual behavior in this financial market, and that can then lead to basically we're in a critical state. And one way then we can apply this is we can scan for large gaps using the Gapstat statistic on the OWL bundle on ThinkorSwim. So here we are on the ThinkorSwim platform using the OWL bundle, and we can actually use the scan feature. We have the Gapstat built in the entire stock market and scan it and find the large gaps. So it's scanning right now. And then here on this column right here, it will come up with those gap stat numbers above and below. So these are all the ones that are more than one or less than one gap. So some very large ones here. On the large side, looks like we have MOS at 3.6. Check that out. Yeah, we see here, look at the size of it compared to our normal risk box down here, R6, is about like that. You can see just from the opening range breakout, we had a 2 or 3 R move up, another move back down. So, with these gaps up, lots of times these moves right off the top can be really good. If we look at gap down, Dominion Energy, yeah, same kind of idea, right? We have we look at this is our risk box, for instance, R6, and just taking that opening range breakout or some kind of frog pattern, we would have gotten a nice move off the top and then another move down for a collapsing dragon, even better. SFC. So just an example there of how we can use the gap stat to scan for targets as well in the ThinkorSwim OWL bundle. This is Griffin Cooper at Ablewaytech. Thanks for watching.